And we are back on the Zero Hour. Joining us now is a good friend of the program, great economist. Dean Baker is co-founder and co-director of the Center for Economic and Policy Research, and he's here to help us make sense of a little bit of the data that's been coming out lately, especially on jobs. Dean, as always, thanks for joining us.
Thanks a lot for having me on.
Oh, you bet. And listen, I wanted to ask you about the job numbers that came out last week and the response to it. The tone of the responses that I saw were mostly celebratory, and I'm also getting a little, well, we'll get into it later, but people seem to be looking at the bottom line job numbers, less so at labor force participation, and celebrating where instinct suggests that maybe the celebration is premature. Am I reading the signals right, or what am I getting wrong?
No, you're reading it right. You know, one thing to go, I say, it could have been worse. It's better than it had been. Creating 220,000 jobs a month is pretty good in the scheme of things, but we still have a really, really big hole, and that's what a lot of people seem to forget. So, it's sort of like, we're back at our own goal line and we just had a 10-yard pickup. Well, that's really good, but you're still a long way from getting the touchdown. And that's kind of the story we have. We're still down, somewhere around 3 to 4 million jobs. We could estimate that different ways, but clearly we're still down millions of jobs. And if we continue to create jobs at 220,000 a month, which is not what I'm betting on, I actually think we'll probably see a slowdown. But let's say we do that, we need somewhere around 100,000 a month just to keep pace with the growth of the labor market. That means 120,000. We're dipping into that backlog of 3 to 4 million at the rate of 120,000 a month. We're still looking on the order of 3 to 4 years till we get to something like full employment. So it's good news as far as it goes, but I think that analogy, okay, we're at our own goal line and we just picked up 10 yards, happy, but you have a really long way before you score the touchdown.
Right, and I guess to belabor the football metaphor a little bit more, are people also looking at different scoreboards and all of this? Because I think what a lot of people do is they see, well, the official unemployment rate is 5.8 or whatever, and they see I guess it was in the 60s or 70s, they changed the target rate from 4% to 5%. I can't remember, but they see that, well, it starts with a 5. It used to start with a 9. We're getting close, and the numbers look pretty good. We must be in good shape. Are they forgetting about labor force participation or discouraged workers that don't show up in those numbers? Yeah,
well, I think that is what a lot of people are forgetting about. So we've had a big fall off in the labor force participation, and that's the biggest reason that unemployment fell from, we're at a peak of 10% back in 2010, so obviously we're very happy it's down from 10 to 5.8. But the more important factor in that wasn't that people were getting jobs, which a lot of people did. But the more important factor in that decline was a lot of people had been unemployed, have dropped out of the labor force. They stopped looking for work, so they're not counted as being unemployed. And again, we get into an argument, well, how much of that is due to other factors? In other words, not the economy being weak. And we know, right, the baby boomers are retiring. That's not a secret. But the way you control for that is we could look at the prime age labor force, people 25 to 54. These are not retiring. There's very few people, in their 40s and early 50s who are in a position to retire. So these are not people voluntarily decide they don't feel like working anymore. Those people have dropped out of the labor force, and that can only be explained by the fact they don't think there's jobs for them, so they stop looking.
Right. And if you look at that number, and by the way, I don't know too many people over 55, between 55 and 65, who feel they can voluntarily retire either. And if you look at those numbers, I take it we're still seeing low participation, and that therefore gives us a sense that the 5.8 or whatever the current number is overly optimistic.
Exactly. That employment to population ratio, which is similar to the labor force participation rate, is still down by about 3 percentage points. And, again, presumably some of the people 55 to 64 have dropped out. They also would like to work if they had the option. And, again, some of the younger people, of course, some of the younger people are making a decision to spend time in school, which isn't a bad thing. But in any case, many would like to work and don't see an option there.
We're talking with economist Dean Baker about the jobs numbers. And Dean, I know you co-wrote a book with Jared Bernstein on the job situation. And I guess what I struggle with on this is infusing the public and the body politic with an appropriate sense of urgency about jobs when the top line numbers or the superficial numbers look decent. I think there's a motivation to look the other way. The Republicans don't want to invest in job creation. The Democrats want to celebrate triumph rather than point out that we're not where we need to be. And I guess the other element of it that I think gets underreported or under discussed is underemployment, both in terms of people not working full time who can only find part-time work when they'd rather be working full-time, and then the fact that, according to one study I saw, the jobs which have replaced the jobs lost in the financial crisis pay on average 23% less.
Yeah, well, these are both important phenomena. We have a big increase in involuntary part-time. People who work less than 35 hours a week who say they would like to work at full-time jobs, but they don't because they don't have that option. And, again, that remains very high. It's down from its peaks, in 2010, but we're still up, if you adjust for the size of the labor force, probably by about 2 million, more people in that category than were there before the downturn. In terms of job quality, we have a lot of people who are working at restaurant jobs, retail jobs, very low-paying jobs who, previously might have had better-paying jobs in construction and manufacturing. Other sectors of the economy that had better pay. And again, people, if they're desperate, they'll take what jobs are there. They have to support themselves, support their families. So you have a lot of people with college degrees who are working at McDonald's. It's not the situation you like to see.
Right. And it seems that our public way of looking at jobs numbers, whether it's by lawmakers and politicians or the public at large, doesn't account for these major flaws. And I think maybe this is just my reaction, but I feel as if people who read about the economy and hear about the economy, but also live in it, suffer from a kind of cognitive dissonance where they hear things are getting better. Stock market figures are good and unemployment figures are going down, but they don't feel like things are getting better. Wages aren't going up. They can barely get by. They know people who can't work full time or whatever it might be. So it seems like the lived economy and the at least superficially measured economy are diverging.
Yeah, well, I would certainly say that's the case. I don't know if that's unique to this period, but clearly most people aren't feeling good about the economy. I'm just basing this. I mean, we have polls, and one of them, of course, we just had the election, and we had exit polling, and most people said the economy is the most important issue for them, and most of the people who said they weren't feeling good about the economy. So, I kind of take them at their word. I mean, people do know how they feel. We could argue whether it's justified or not, but they don't feel good about the economy, and, to my view, that would seem to fit with the story where people aren't seeing their wages go up, and they don't feel secure in their jobs. They're not putting money aside for their retirement. So that seems to fit with a lot of the data I see. And then at the same time, where you have people celebrating 220,000 jobs, I'm sure to a lot of people that sounds very strange. They don't obviously they know if they have a job, they know if their wages are going up. Total numbers in the economy don't really mean anything to them.
Right. We're talking with Dean Baker, economist and co-director of the Center for Economic and Policy Research. And Dean, you don't have to answer this question if you don't want to, but talking about the exit polls and the election itself, were you at all surprised by the results?
Well, it was more of a Republican sweep than I expected. There had been polls beforehand, of course, showing that the Republicans would retake the Senate and pick up ground in a lot of areas on the Democrats, but it was certainly more of a sweep than I expected. And of course, living here in D.C., we follow Maryland and Virginia, and, the Republican winning in Maryland for governor, that was certainly a surprise because Brown, the lieutenant governor, had been seen as a big favorite there, and it is one of the most Democratic states in the country. And then over in Virginia on the other side, Warner was running for re-election in the Senate, and he again was thought to be a shoo-in, and he did win, but it was a fairly narrow margin, a half point, maybe as much as a percentage point. But in any case, he was thought to be ahead by double-digit amounts going right into the election. So in both cases, the Republican candidates did considerably better than I had expected, certainly in those states.
Well, which was more or less my reaction too, and I just took it rightly or wrongly as a kind of expression of frustration and anger perhaps nihilistic, but understandable expression of frustration and anger at the fact that for a lot of people, their lives don't seem to be getting better. And if you look at stagnating wages and all that, the frustration certainly seems understandable. What could we do, even at this point? I mean, leaving aside the politics of what wouldn't pass the Senate or what have you, what sorts of policies could the government, theoretically at least, enact right now that would create some jobs?
Well, in terms of what the government could do, I mean, spending money would do it. I mean, can President Obama unilaterally spend money? No. Obviously needs appropriations from Congress. Right. So in terms of, what President Obama can do to create jobs directly without authorization from Congress, fairly limited in terms of direct government spending. I mean, one of the areas that I've, written about, talked about a lot, because I think it's hugely important, is our trade deficit, because that basically creates this big hole in demand that is not easy to fill. You could fill it with a budget deficit, and you could fill it with a bubble. You could fill it like as we do with the housing bubble in the last decade or the stock bubble in the 1990s. But there's not a really good way to fill a hole in demand like that. And that should make the trade deficit front and center. And President Obama actually can do things on the trade deficit. It's basically a question of negotiating with our trading partners. China always comes up as the biggest one and the one we have the largest trade deficit with. But it's a number of other countries we also have a large trade deficit with. And the key here is getting down the value of the dollar against these other currencies. And again, this is something that the president can negotiate. He really doesn't, he could go into these negotiations, or he may not be there personally, the Secretary of Treasury, or whoever he sends. They could negotiate with China and say, look, we want you to raise the value of your currency against the dollar, and we trade things for that. You always get these absurd things, because I've raised this with people, and they say, oh, China won't do that. And you go, what do you mean China won't do that? If we offered to give them Hawaii, they wouldn't do it. If we gave them California, they wouldn't. I mean, obviously they would do it for the right price. And, there are reasons why a lot of interests in the U.S. don't want to see a fall in the dollar against the yuan. Essentially, it hurts the financial sector. It hurts some other important sectors in the economy, or I should say industries, companies. But that is something that the president has power over and could really do tomorrow. I mean, not that we'd see the jobs tomorrow, but, we can negotiate this tomorrow.
Well, and just for those members of our audience who may not be familiar with these kinds of issues, by lowering the value of the dollar, American goods would be less expensive overseas. More people would buy them. That would create more American jobs. That's the theory in brief, right?
Exactly. So basically the dollar, when people talk about, we want to be competitive internationally, the value of the dollar swamps just about everything else. I mean, we could talk about having good education, which is good and important, and we want to do that. We could talk about having good infrastructure, same thing. But, if we're talking about what's going to happen the next year, 2 years, 5 years, nothing has anywhere near as much impact as the value of the dollar. If the dollar rises by 10% against the Chinese currency, it's the same thing as if we put a 10% tariff on our exports and in effect had a 10% subsidy on all the goods that we might import from China and other countries. And obviously it puts us at an enormous disadvantage.
And when we come back, we'll talk a little bit more about this. Please stick with us. We're talking with economist Dean Baker about the current state of the economy. I'm Richard RJ Eskow, and this is The Zero Hour. And we are back on The Zero Hour. Joining us for the second half of his segment is economist Dean Baker, co-director of the Center for Economic and Policy Research. Dean, when we went to break, we were talking about the trade deficit as a way of creating American jobs. And I guess we get a lot of rhetoric instead. And obviously that would hurt the financial industry, as you said, and presumably industries that depend on imports rather than exports. But we get a lot of rhetoric from what I would describe as conservative economists saying that the real reason why we don't have more jobs in this country is either education or other structural changes. And I take it that your feeling is that's not the case.
Yeah, there are implications to when people say that, there's implications to those arguments, and you try to look for the evidence that would support them. So Well, we should expect to see, if it really the case that, we have the jobs, but people don't have the right education. So we should be able to identify sectors of the economy where there's a lot of job openings that, firms can't seem to get workers. And, I follow this closely. There's a series on job openings every month. And the area where we find the largest number of job openings, at least compared to the pre-recession period, are in retail, trade, and restaurants. Those aren't areas we ordinarily think of as high-skilled sectors of the economy, but that's where most job openings are, at least most relative to the pre-recession period. The other things we look for is people working long hours, and again, it's just kind of straightforward. If you're an employer and you're going, damn it, I can't find the workers I need, well, you'd have the people you do have there working longer hours. Again, we don't see that. There's no evidence in any major sector of the economy that people are working many more hours per week, at least on average, than they did before the downturn. And then the other big sign is rising wages. It's just amazing how many times I hear these stories where employers are out there saying, I just can't find anyone. And then you go, well, what do you pay? And then they look like that's asking them a strange question. Well, of course, if you're an employer, you know what you're doing, and you really need workers. There you are trying to increase output at your factory, or it's a restaurant, and you have all these people that you have to turn away because you don't have the wait staff to serve them. Well, then you'd offer higher wages to get more people, working there. And again, we just don't see that. There's no major sector of the economy where we see rapidly rising wages. So the evidence simply doesn't fit that story.
So the answer to the jobs problem, aside from the fact that we'll now have a completely obstructionist Congress, but in a theoretical world, the answer to the jobs problem: negotiate for a less expensive dollar, invest in infrastructure, create jobs, do the stuff we basically know how to do and have known how to do since the 1930s to revitalize the economy, right?
I'd say that, let me throw in one other thing, because this is, can be done at the state and local level, is we should encourage policies that, in effect, spread around the work. And, one of these things that Germany's done with great success, work sharing, so that you encourage employers rather than lay people off to reduce work hours. So instead of laying off 10% of your workers, get them to cut their hours by 10%. And the federal government actually supports this they pick up the cost. Something like 26, I forget the exact number, 26, 27 states now have work-sharing programs as part of their unemployment insurance program. So employers can do that, and the good thing for states is that the federal government picks up the cost of that, at least through the rest of this year, and it likely will be extended into 2015. We'll have to see whether that will happen in Congress. But in any case, that's another thing you could do along the same line: paid sick days, paid parental leave. Again, things that in effect spread around the work, because if we don't have enough work for people to do, better that it's shared and people could have leisure they enjoy rather than being unemployed.
Right. And it'll be interesting, by the way, to see if anyone looks at whether there's any improvement in productivity when people work, let's say, 32 hours rather than 40. It'd be interesting to see whether it keeps people are giving more focus while they're on the job.
Yeah, no, and there've been studies on that. I wouldn't say they're conclusive, but on the face of it, there's reason to think that would be the case. And some of the studies have found that. I'll just say the evidence at this point, at least that I've seen, is mixed.
Well, intuitively, it seems to make sense, but obviously we want data. We're talking with Economist Dean Baker about the job situation. Hey, Dean, if we can, I'd like to switch a little bit, because you've written a couple things recently about postal banking, which is something that I've also been interested in at times. And my sense was, well, it's clear, you make it clear that you're all for it.
Yeah, I mean, the logic of this is that, post office is in every community in the country, and we know we have a problem with large on-bank population. These tend to be low and moderate income people, and they do need banking services. They often get ripped off. They go to payday lenders. They go to check cashing services. They often pay exorbitant fees. So here we have the Postal Service. They're located everywhere. They're underutilized. They have the buildings there. They're not fully utilized. We've had a decline in mail delivery. And, we know that it has financial straits. Those are exaggerated, I think, but it's true. There are definitely financial issues with the Postal Service. And this seems like a great win-win. We have excess capacity. We have an on-bank population. We can provide a valuable service to them. And, it's not a giveaway here. We're talking about, people will cover the cost of these services. And almost certainly they can get a much better deal if this were done through the Postal Service than through, the existing, non-bank financial institutions that they're using.
And, people who think it's a crazy idea to use post offices as banks may not realize we used to do that. I can't recall exactly when that ended, but there was a time in American history when post offices were one of the few institutions that were out in all the prairie towns and all that. And postal banking, I think, was a reality until the early part of the 20th century. Is that right? Do you know?
That's right. And you have a lot of countries still have postal banking systems. Japan has one. Many of the European countries have one. So it's not at all an alien idea. It's not alien here. It's still in practice many places around the world. And, we're not talking about rocket science here. This is, a question of, can people have a limited bank, checking savings account? Can they have electronic cash cards, prepaid cash cards? These are fairly simple things, and, they already exist, and the point is just that we could likely give those to people at a much lower cost through the Postal Service than what they're paying now.
We're talking with Economist Dean Baker about the idea of postal banking. I know there's been a little bit of controversy. The Inspector General of the Post Office, I think, raised this idea of going back to postal banking, which, few people had over the years, but it came from within. But I think the Inspector General had a fairly limited mission in mind, and I think one of your points was it doesn't need to be that limited.
Yeah, well, one of the points that, I think when we think about the more general issue of the Postal Service is we could think of the Postal Service as providing a service in the same way the fire department does and the police department does. And, we understand those are going to cost us money. No one expects the fire department to make a profit. We want to be protected against fires, and we pay taxes for that. We could think of the Postal Service that way. Alternatively, we could say, no, we want it to be run like a business. It should be run on a profit-making basis, not necessarily make a profit, but that it won't have subsidies from the government, it'll cover its cost, and, compete with private businesses. You could also make an argument. We could argue which way we should do it. But as it stands now, we have this peculiar mix where we're telling them they should be run like a business, they should be covering their cost, but every time they look to get into a sector of the economy where they can't operate profitably, we say, no, you can't do that because you'll be competing with, UPS, you'll be competing with private banks. That doesn't make sense. And if we're going to go the model of saying we expect them to cover their costs, then we have to say, look, where it makes sense for you to expand, where there's a new line of business that makes sense, you should be able to pursue it. And I would certainly say that is the case with postal banking.
And I would add to your argument that it is obviously an institution created by the government, and where there's a chance to use your resources and infrastructure for the public good, as would also be the case with postal banking by getting people away from the predatory world of payday lenders and the like, that's also a reason to do it.
That's right. I mean, people are horribly ripped off by payday lenders, and again, there is some argument there that some of the people coming there are high risk, so you could understand that a little bit. But again, it's where you have people paying in effect interest rates of well over 100%. We certainly could do better. And, the Postal Service, one of the things I mentioned in my blog post on is if you had someone who had direct deposit, just like a simple checking account, so they have direct deposit every 2 weeks or week or month, whatever, the post office knows their check is coming in on Friday. It's Wednesday. They need money to pay a bill or their electricity is going to be shut off or whatever it might be. That's a very low risk loan for the post office. So they can make that loan, charge the person, implicit interest rate of 20% or whatever it might be, and come out ahead on it, covering their cost. And person, pays their electric bill. Everyone's happy. So you could structure this in ways where, I think there could be large dividends for a lot of moderate income people who currently are being ripped off by payday lenders and other non-bank institutions.
And by the way, I talk to my mail carrier all the time. She's a very nice person. So we're also helping a group of people who deserve to have jobs keep their jobs, which is a noble undertaking as well. Well, before we go, Dean Baker, anything else on your mind? Anything else that's been striking you in the news lately that we ought to talk about?
Yeah, well, one of the things that I've been struck by, it looks like we're going to have another round on the Affordable Care Act. The Republicans are very intent to gut it, ideally eliminate it altogether, and the Supreme Court has taken up this issue as to whether the law authorizes subsidies in exchanges that were not set up by the states. These are essentially red state. And this is, I think really unfortunate that the reading of the law that would give you that is utterly bizarre. I'm not a legal expert, but I do follow the debate enough to just see that this really doesn't make any sense. Basically, it's taking, 4 words, 5 words out of any context in the rest of the law and saying, oh, this is what the law meant, ignore everything else in there, everything everyone said about it, including the justices themselves last year. But one of the things that really was discouraging, and the right's making a big deal out of this, Jonathan Gruber, who's a health economist at MIT, is a very good economist. I'm not knocking his work, but he was caught on film, saying, yes, the law was deliberately deceptive. We wanted to make it opaque. And I think what, grated me and probably most people who saw it, he said the American people are stupid. We have to, we had to do these things because, they don't understand. And that was just, obviously it reflects an attitude on the part, obviously of, Mr. Gruber, but I think one that's shared by a lot of other intellectuals that, people are stupid. I certainly will acknowledge most people are not very well informed about, political issues, policy issues. They're not wonks. Jonathan Gruber's a very smart guy. He does this for a living. He has his nose in the books. He knows these things. I also am in a situation, that's my job. I know these things. I don't blame someone who's, raising 2 kids, works maybe 2 jobs, comes home, has to deal with the kids in the evening. I don't blame them for not getting the latest report from the Congressional Budget Office on how much health care, the Affordable Care Act is going to cost. So I really was kind of appalled, as I think most people were, at hearing someone like Jonathan Gruber call these people stupid. Again, I understand people not being informed. I think that's a true statement, but that hardly makes someone stupid.
Absolutely. And by the way, I was planning to have some remarks about Jonathan Gruber later in the show. I think, it's perhaps not as malicious as it sounds, but as you say, it betrays an attitude. And I think, by the way, there is a cross subsidy. I think anyone you talk to who understands healthcare financing at all, and I feel I have a decent grasp of it, knows that the concept of the theory behind the individual mandate involves a kind of cross subsidy from healthier, typically younger enrollees to older, sicker ones. And in a way, that is a form of taxation, not directly, and you could call it many other things. But I think to assume that people won't figure that out at some point is underestimating the intelligence of even fairly low-income voters who may realize, wait a minute, I'm paying into this system and I haven't needed to use it much, and I don't feel I'm getting a lot for my money. I mean, I think you got to have a strategy for dealing with that. Don't you think?
Yeah, well, the reality is most of us are actually in that situation. I get my health insurance through my employer, and I'm very thankful I've had very good health, my life. And, I consider it a good thing I have any of my insurance. But what that meant is that I've, in effect, been paying all this money for nothing, because, I'm paying it through my, we'd be getting higher pay. Again, I'm the boss here, but, we do provide health insurance for people. If we didn't provide the health insurance, we'd be totally fine. We'll just give everyone more money. We're not trying to make a profit. So that's money out of my pocket. And most people, thankfully, most people are in good health. They might not always realize this point, but the fact that they're paying so much for insurance through getting a lower paycheck is the exact same sort of subsidy that we put in place with the Affordable Care Act. So, I think most people are pretty much okay with that. I think it helps to have it explained. And, again, I'd rather focus on trying to explain that to people than calling them stupid.
Yeah, I think it helps to have that explained, and it also helps, frankly, if the insurance they get covers them in times of need, and I think that's where the work remains to be done in our healthcare system. But
and this is one of the things that I just find so unfortunate because, people raise many good and appropriate objections to the Affordable Care Act. The New York Times has run many good pieces about how, for example, they had a piece a little while ago about how a lot of scans, for people who've had cancer, that these aren't covered under the Affordable Care Act. So you might have someone who's had cancer and they're trying to prevent a recurrence and they're looking at $1,000, $2,000 for the scan, and they don't have that. And, it's not going to, their insurance doesn't kick in until they get the deductible. That's the sort of thing you'd want fixed. But, as long as we're having these silly arguments about, this is the worst thing ever and it's slavery and death panels and this and that, we can't talk about how to make it better.
Well, and this is where we're talking with Economist Dean Baker. I do have to add that I think one of the struggles we get into too, frankly, is partisanship on the left a little bit because, as I say, I think healthcare financing is something I know a little about, and if even if there's an article, New York Times article about someone who didn't realize it and was unconscious, and they brought in an assistant surgeon who wasn't on the plan, suddenly they get a bill for $103,000. All those stories that if one says, well, there are gaps in this plan that we need to fix, or there are things about it we need to change. I've had people turn against me, Democrats, and say, "Oh, now you're joining the screaming hordes shouting death panels." Don't we need to figure out a way to distinguish constructive criticism, which improves the program, and frankly, I think would politically help Democrats, from the sort of nutty criticism?
Absolutely. I mean, you have people that will get this stuff out and say, "Oh, we have to destroy the Affordable Care Act." No, that's not going to fix these problems. So the logical solution is, and if you have Republicans out there and they point these out, as some of them do, go, good, let's adjust the Affordable Care Act, say, okay, you can't be billed if someone comes in and, you're unconscious and they said that provide this or that service to you. You can't be billed for that. Or the case before I was talking about with diagnostic treatments. Yeah, that's a really bad thing about the Affordable Care Act. Let's fix that. We know how to do that. You just, pass an amendment to the act and say that, all insurers who are, covered under the Affordable Care Act, they have to also pay for diagnostic treatment, no expense to the patient. So, I mean, there are things like that. They're fixes, not all of them are going to be easy. Some of them are easy. And the point is, where there's an identifiable problem, you come up with a way to fix it. You don't just get up there and start yelling and screaming about it.
Right, absolutely. And by the way, a final thought on Jonathan Gruber, who also advised Mitt Romney on Romney Care in Massachusetts. I didn't see any headlines saying Romney advisor insults the intelligence of the American people, but maybe that'll come for another day. Dean Baker, thanks so much for joining us, co-director of the Center for Economic and Policy Research, economist. As always, Dean, great to have you on the show.
Thanks a lot for having me on.
You bet. I'm Richard RJ Eskow, and this is The Zero Hour.